Hello, everyone. This is Reggie Holmes from All Things Financial Cafe. This is your Tuesday evening update. Market close. We had a very interesting day as we opened this morning. Down 100 points on the S&P futures or the Dow futures, but we quickly moved down at the open, down about 80 points, to eventually reversing in the middle of the day and going up as much as 80 points. We ended up closing 17 points up. The Nasdaq had a strong day, up 29 points, and the S&P closed down, or actually closed up only 6 points. Now, this brings a little bit more clarity of what's going on in the market. Um, Still don't have a direct answer of what's about to happen next, but it helps us out a little bit more as we get another day of up and down, another neutral day. Now, let's look at the euro here. This is the euro USD. The euro broke down again today, and it looked like it's ready to go some more. You can see here it tests support. It fell to break support today. This support right here. We'll see if that holds tomorrow or in the next couple of days. But it's not surprising to see that the market popped up when the euro kind of stabilized right there. The euro is weak. People are trying to ignore the euro like it's not a major significance, but it is, and it will catch up to people. So even though the market went up today, I'm not leaning towards the market going much more higher, but we'll talk about that right now. I'm going to take a look at the SPX, which is the actual S&P 500. We can see we closed at 1257. Now, a couple things to notice on this particular chart is this two bands right here. This top one, this bottom one. Those are called Bollinger Bands. The two bands are coming together and are coming into a tight squeeze. And when that happens, it tells you that something major is coming next. So the big move to the upside and downside is coming. One of them is going to go one way or the other. Again, as we stated earlier in this morning, our top side is this 200-day moving average of 1275, and then we want to see follow through above 1292. 1292 and above, and we close above it, and good volume, we're going long in the market the rest of the year. Other than that, we are leaning towards the short side. We are light to the short side. We will get aggressive below 1230, and more aggressive below 1215. 1215 is the ultimate number because that's the last low. And it's the low of this pattern that I'm about to talk about right now, which is called the head and shoulders pattern. The head and shoulder pattern has formed over the last year and a half on the S&P. I don't know if many people are paying much attention to this, but it has formed, and it's a dangerous pattern because volume came into the market on this right shoulder. And then we had decent volume heading up to the head, which is right here. I'm sorry, the trend line thing is in the way. And then we come over to the left shoulder, which is trying to form right now. We can see the congestion. The volume is lighter. Okay. When we see that, that is a good sign of a good head and shoulder pattern that's forming. Now, head and shoulder patterns do not fail often. This is a very reliable pattern. When it breaks the neckline, which is, I'm going to draw it from here to here. You can also draw it from the top to the top, but I don't believe that's right. I think this is the correct pattern here. The low here is 1215. The low here is 1044. Right in that range. Make sure I get the right candle. Right here, which is 1044. So 1044, 1215. That's the neckline. I take it from the top with 1370. I take 1044. You take that's 370 will give you 1,000. 370 will give you 1,000. 1,044 you can say, which is this first low or the first leg here, which is 1074. That's the low. That will be the first leg before we get probably a consolidation period if we were to break the neckline of this head and shoulder pattern. Now, head and shoulder pattern can be broke on light volume and then continue to the downside. So we're going to see if this can continue. Okay, so as we look at this pattern, I want to put up the SPY. The SPY has my own balanced volume chart. We can see here how aggressive the volume was during his first left shoulder. It was in the millions. And then on the rally up, we had a decent amount of value come in. We got into 7 million over here. What I want to do is draw a nice trend line that's forming right now. So there, we got nice volume that came in on the first shoulder, decent volume on the second, but lower than the left shoulder. And then we have lower volume that's coming in here on the right shoulder. So this is very significant because this is a true head and shoulder pattern that's forming because of the volume. The volume is confirming this head and shoulder pattern. So this head and shoulder pattern is telling us that from this low here, if you count 370 points for the low of the SPX, just as a basic measurement of 1,044, you're looking easily at the low of 600, somewhere in there, being tested. And that is our projection. That's what we've been looking for. That's what we're looking for in the future. Now, I believe there's going to be one leg down if this neckline is broken to this low of 1071, and that's where I believe where we will trade sideways before or even up a little bit before we get the next major move to the downside. So the move up could be, if this neckline is broken this week, which is a very possibility, not saying it will, very, very possibility that it could, we will see this during November and probably a rally going into December. I mean, in the middle of December, maybe, somewhere in the week of second week of December, a rally taking us into Christmas time. And that would be the move up, maybe up into January, and then we'll start to float around and start moving to the downside. So that is the SPX. This can be broken on light volume, remember. So we're going to look for a breakage of this 1215 area for a true breakage of the neckline. If it happens, watch out. Watch out. With the euro down, with all the problems in Europe not being solved, the Fed is pumping money at the end of these days in these markets. They're trying to pump money into these markets. It's not going to hold. It's not holding because the bulls are not coming in behind it to push it up. That's why we have failed to break the 200-day moving average twice. Right here at 1275, we failed to break it twice. Right here, I'm going to erase these trend lines here. You can see we went up to 1292. We came right back down and closed right below it. Which is a major reversal pattern, the evening star pattern. And then we came up and tested again. Then we had what we call a bear Sasha pattern, which is a major reversal pattern. And now we're up here again, and we haven't even got back near the 1275, 1272. We got to 1266 2 days ago, 1264 today, 1264 yesterday. So it's very interesting to see what's going to happen in this market next. One encouraging thing for the bulls is we still above the 20-day moving average. We haven't closed below that, so people are holding on. But the head and shoulder pattern is a very interesting pattern. It's either going to fail or it's going to play itself out. And I can tell you the odds with a head and shoulder patterns have been great. So at this point, I say sit tight. Let's see what happens over the next couple of days. This week should dictate what's going to happen next in this market. With the euro breaking down, I'm telling you, it's just watch out. Be careful with your positions. Be careful going long because any morning this market can open up 200-300 points down. So be careful. Happy trading. This video is for educational purposes only, and these charts are brought to you by Option Express. So I just want to thank everybody for tuning in and have a wonderful, great evening. Have a wonderful, great evening.